Welcome, it's the Crypto Sniper. We're going to talk to you today about Bitcoin primarily, and at the tail end of the video for the Hexagon community we will give an update on the HEX situation. All technically, you're with the best technical analyst in crypto and the traditional markets. That's right, the Crypto Sniper. Thanks for joining us. Okay, let's take a look at what's gone on. But before we do that, let's also hear what was the news and the drivers for recent events. Of course, there was a sell-off in Bitcoin and all the talk about SEC and staking, etc. These are the supposed drivers. I'm here to tell you that most weakness is seen beforehand by the footprints in the sand, which is, of course, invariably the insider cartel. And that was evident as per our previous video where we warned that there was a potential for a mini head and shoulder break to the downside. Let's have a quick look at that highlight before we begin our full Bitcoin deep dive. Wanted to get that little concern point out about the potential for a sell-off on a mini head and shoulders. I don't think it's too overly threatening, to be frank. Let's turn to the live charts now and have a look. Here we go, pop above me. So you can see now that broadening structure broke. Here's a couple of key things technically you could have done. As I say, I don't look to trade 2 hours, 4 hour time frames. I prefer being on the macro technical, not having to worry about small day-to-day moves, being over leveraged, and etc, etc. I like to trade the big time frame charts, often with medium sized into a small size pattern as a triggering timing event. Once that triggered, it starts to roll me into all the bigger patterns. This, by the way, is one of the best ways that you can multiply your way to wealth. Patterns within patterns across what we refer to the 3+1 time frames, which is part of the HVF method. So let's have a look at the chart again. So a couple of things that come to light. As I've said, the draw for the head and shoulder was pretty much, I'll stay with the blue that we were using, pretty much a broadening structure. You've got to note that we were also expecting weakness into this. You could see a rising wedge that was just testing, making marginally higher highs across the tops there. We have our splitter there, then you gave up, you try to hang on the capping ascending grind line, you had a spill to the other side, you broke through, you have a return move, you dip down. That gave our first established key reversal inflection point for what we refer to as armpit 1 in complex head and shoulder. So with that, you then get a head, pop, 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 and down, and you re-meet and re-engage with the key significant level that was 22.7 in our worldview, 22.7 as a neckline. Once you started to get the broadening, that potential event was there that we alluded to. You can see the basing ascending grind line there, just run, just supported on, and just run there. We talk about small fractals, little inverted patterns on much smaller time frames that are leaning up against our key grind lines, which is another key concept of HVF method that you could learn more about yourself if you elected to get engaged. That broadening structure points with its ascent to a likely downside break. You could have actually got short at that point. Let's do that potential. Just give you, were I trading and on the charts 9 hours or wanting to just check how everything would go, this is what you might have done. You would have got short earlier instead of your neckline break, which came a little bit later, and you could have got your stop on that fractal. That's using smaller time frame patterns that were indicating a squeezy, that Japanesey, so tight, have a piece of cheesy. Yes, indeed, bang, you're off. That's your stop all the way down to what might be a potential target for that head and shoulder. Little bit of pushback possible. You could have a rising wedge, and you could still be seen to make further downside. It's also important to note that the dollar during this period on our Bitcoin analysis had also firmed up a wee bit during the last 2 days against both the euro and other currencies. So that's the dollar index as well, and even against the Japanese yen and against others. So you are getting a small headwind in Bitcoin as well, on top of FUD, localized news, etc., which is invariably serving as a bit of a driver for Bitcoin, even though staking is kind of not so much a Bitcoin thing. Anyway, so that's why I say a reason to sell, a reason to sell, a reason to lock in gains. You made a high of 24,240 over there. This target, for those that want the numbers, and you're getting the Bitcoin numbers from the man who does the macro technical analysis with you right here. Look into the eyes, fantasize. Yep. 160 is roughly the target there on the 22,700 neckline. Now, that doesn't mean it has to transpire, or that it transpires in a hurry. You're going into a weekend, you could, in the lack of news, you could get a little bit of relief rally, hence why I'm drawing a rising wedge. And even if you spilt out of that rising wedge, it doesn't mean you make a new low. You could set up and wind up and then have something that breaks down subsequently to your target in, say, a continuation pattern of forms, or in actual fact, if there's a bit of zip or there's some dollar weakness, you could actually get a reversal. Just because you draw a head and shoulders, just because it triggers, doesn't mean it's absolutely guaranteed to make targets. Having said that, it's performed pretty well, and you've got exactly what you expected. Look at that break. There's your break. There's the triggering event. Look at the return move, and then the spill. That's probably the capitulative phase. So we have 5 stages of a breakout. We cover this in our theory, and now you're in a little bit of pushback phase, and then you can often get the third leg down, which could be the one that finishes for the target. There's one key concern that we've also raised, and again, I'm not going to overweight this. And I'll tell you why we're not excessively bearish in spite of this. You've got to remember, this is not the hugest time frame. So a 2-hour time frame for a head and shoulders. It's not hang yourself from the nearest beam stories. The only concern is on the running of this target, were you to see a kiss of the 21,000 and maybe dip to a 20K or a 19.9s, etc., you start to have a new threat, which I didn't cover in that free view video, but I had covered with my premium prior to that. And this is the value of forward-looking scenario casting, technically using potential pattern structures along with key levels of significance and HVF method techniques. And that would be the risk that potentially on a slightly bigger time frame, let's do it, you could end up with this serving as a right shoulder. You've got the 21K in the blue, the larger move being your head, and then you run down here to the 21K again, have a bit of a bounce. You then have what we refer to as, and this is only lexicon, not HVF method, you won't find it anywhere else on the internet, but you have a nestling head and shoulders that is a larger version. So this becomes the monarch, the first in a reversal in the blue, and the pink one is now a broadening set of shoulders on the way down, on the basis that key levels of significance, one of the fulcrum chapters of our theory, are being run and being tested. So you don't want to run the 21,000 and then have a bounce, because that opens another potential threat, and in much the same way as we identified the original threat before any other YouTuber who is just following news flows and talking about it, some of them with hundreds of thousands of subscribers, before any of the others were warning of a downside. Even before the head and shoulder aspect, we were warning about the grind that was going down. You could see it in the rising wedge. So this was showing fatigue. Eventually this, as we've mentioned, falls away. And then after that, after that fall away, you had clearly at that point had broadening, higher highs, but consistently being dragged down to the same level. Again, an ascending broadening structure on what was bull poles, bullish to the upside. You'll learn about broadening structures. Most people don't know what to make of broadening structures. Some of them draw them. Most people don't know what to do. What is the difference between an ascending and a descending megaphone, and dependent on trend, what does it mean, etc., etc. So all of these concepts, very, very valuable, very, very key, brought to you by the only man in technical analysis that addresses them, writes up the full theory, records it professionally with slides, and helps educate and then walk through the technical markets as they are happening, hence why you get the warnings before the warnings. There were apparently quite a high level and a spike of Binance liquidations of longs. Oh dear, oh dear. If those people were in the sniper circle, they wouldn't have thrown up so much money. Everybody hasn't got a few pennies to spend on learning, but they'll all lose 10, 15, 20 grand 5 times in a row over the course of a year or two, just by being badly positioned in the market, all of which is indeed preventable. So let's have a look on the macro, and why am I a bit benign? I'm not excessively fear-mongering on this. Let's take it up a higher level. Let's say the worst case scenario transpired. The FUD escalates, the SEC goes full retard, as they're prone to do with that little pig face of the Sabbatean Frankist. Let's say they go pull whatever they want to pull and they start threatening. At the end of the day, guys, crypto is serving as an on-ramp of training for a central bank digital token. They may not, I want to put a controversial consideration to many of the Bitcoin people, they may not like the idea of competition. You know, these are the people that said competition is sin. Okay, so they might not want it because they don't want something that's truly decentralized showing up their token. It may have been created by them in the first place, just as a training tool. But all that said, I don't think it's going to get this bad. But technically, the worst case scenario, as I've already said, would be a run there, another rally, a hard sell-off, and then you could have, where's that downside target? You're not going to like it. I'm not here to say it's absolutely happening. I don't feel it's my highest priority right now. It's a threat. It's a threat. It's also important to say we have upside targets that remain unfilled at the same time as we're now setting up downside targets that are as yet unfilled. So somewhere something fails, or alternatively we go all the way down and all the way back up. That's also possible. So all could be winners and all could be losers. So all options remain there. However, the probabilities are done and the possibilities, what is being weighed up, is done by good quality technical analysis, and we'll continue explaining why we will say that. So there is a slight risk if you got the second head and shoulder as we've drawn, where that would be a future right shoulder on that target performance, that you could be looking at 17 as a run. Now that would negate most of this bull market that you had that took you up from 24.2. It would negate it quite immensely, and you'll have done a little bit of a round tripper. I won't say that's never happened in crypto, because it sure as hell has happened quite a bit and quite often. So you can't rule it out. Don't lose your head on leverage longs. This is not a time for leverage. We've very rarely actually is it a time for leverage, and we've noted with some exceptions when that has occurred. So a return to 1717, by the way, would bring you back to that left buttock, right buttock bottom, and the neckline we drew some time ago at that very, very level. So is kind of a return to key levels of significance in that, which is interesting. What about the upside targets that remain outstanding in terms of our view? Well, they were okay patterns. I wouldn't have said they were the strongest. So by the way, none of these are HVFs. These are things like W bottoms, inverted head and shoulders, not bad, but and of decent form, but probability wise, we don't speak in absolutes on anything, and especially less so over here. So this particular dip had two potential key necklines. That one I've already referred to, which is the concern that that target round trips. At the moment, this momentum, while ugly and would have hurt leverage longs, not particularly scary. If it accelerated, then you'd have to go for some concern. So if you had a rising wedge and you had a really harsh sell and then another bounce, you'd have to start thinking, man, it's quite likely that the one sell, so that would be your AB leg, that would be BC, the rally, that would be your CD, which is the third down leg, which is often the biggest. So if you accelerated and had some really stretchy third legs, often these are 61.8 fib larger than the first leg, you get something like that, you have a risk of making this these other targets. Again, as I've said, you'd kind of like a shoulder in there as well. I haven't drawn that, so that would come down like that rather after a bit of shouldering and then be like that. So I didn't allow for it in that initial sketch. But you get my drift. That could be a set of circumstances where that transpires. So watch out for it. The upside is the lips of this cup that were both kissed and had some degree of pause. So there was quite a bit of key levels there where there was interaction after that was around the 21k level, and then we took a rest and did a little bit of broadening there before we did the continuation. Why did we do continuation? Learn about that megaphone theory as you wish, when you like, at themarketsniper.com. So there is a bit of a cup there. Now it isn't a double bottom, so there is no in the middle here rally like there is down here. It isn't a double bottom, but many people project the low to the neckline. Again, not super strong, but that was pointing at a 26.5. We also had legacy 25.5 and a key HVF target at about 25.3. So those were interesting levels, but we don't really have anything too strong to base them on. We've drawn that out of interest, which is one edge of the cup here and one edge of the cup there, and the entire round tripper steep cliff down that, of course, FTX brought to us. Thank you, Sam Bankman-Fried, the other frankest thief and fraud, and the return up there, which started to get nice and buoyant and steep. So but you've run out of momentum, and that was that broadening that we were referring to, that was also indicating a potential rest. In fact, inside the community, halfway through this candle, we thought maybe a 50% retrace. So it doesn't mean you have to make either of these numbers to the downside. Why are we more benign? Well, let's look at the comparables. It's going to depend a little bit on cross asset analysis too. So what am I going to be showing you? Well, if we go to Bitcoin versus the NASDAQ, I want to put you onto this fellow again. I think for all intents and purposes, we want the 2-day, and I'm going to log scale that. So here's where we are on the falling wedge. This is a comparable of, remember, Bitcoin divided by the NASDAQ index. So why do we do this? Well, we like to do cross-market analysis generally that gives us a feel of Bitcoin's perceived valuation compared to other assets at that time. And the NASDAQ is tech. And in Wall Street's world, Bitcoin is just a hive mind of tech literate people pushing a tech area of interest. So lots of interaction across here. This is Bitcoin versus the NASDAQ. It's important to note the 69K high was an underperformance to the 64K high. In other words, the NASDAQ was now overperforming Bitcoin in between the 64 and 69K high, already highlighting some of the risk. If you treat the risk in terms of the tech space, the NASDAQ is here and Bitcoin is even further perceived risky. So some of the risk was coming out of Bitcoin and rather going into the NASDAQ, and then eventually it went out of the NASDAQ. We gave you 3 head and shoulders on various indices, the Dow, the NASDAQ, and the S&P, all of which performed to the downside, whilst someone was saying they would go up 60%. So that falling wedge, we had an interaction post the FTX event. We weren't far off one post the 3 Arrows Capital. That captures your falling wedge post the head and shoulder here. There was a head and shoulder here as well, remember? There she blows. And also the second interim pullback on the way to the first cup gold nuggets target. So that falling wedge is a good one. It's on a big time frame. We like the macro a little more. You've tested the edge and you've had a little pullback. You popped out the channel here. You also ran these highs, these localized highs slightly. Let's just clear our face and make sure we're talking the truth. Yes, we are. They're both higher than both of those. I want to highlight something else in terms of broadening structures, which is pretty useful for Bitcoin fans. Your video, Bitcoin fans, hit the like if you're enjoying what we're giving you right now. We're trying to give Bitcoin fans exactly what they want to know and what's likely to happen in the key God market, crypto. So that is again, a broadening structure on a down pole. Actually, that begets often future bottoming, which is why we're not capitulative miserable. We were super bearish during this period. Everyone was like, oh, you're just hating crypto. No, we're telling you what we're seeing. We're not in that tone of voice anymore. But you will have technical rallies and technical dip back down. Marginally higher highs is a slight problem. It points to some weakness. So you could have underperformance for a while and come back down to these levels. But in the longer term, the longer term. So not tomorrow, not next week. Short term, you could actually be soft. But in the longer term, it is looking like a basing set of processes. And a failure to make a new low, even if it comes some way down in the Bitcoin versus the NASDAQ valuation, even if you came back to the splitter on the wedge and then started to go up, would still be a higher high. And the next time I would expect you to make a higher high than before. So whilst during that period you would be miserable, it's a move to the downside if it were to occur. The longer term future for the performance of Bitcoin versus the NASDAQ in the not too distant future, I'm talking medium term, where short term is days and 1 or 2 weeks, that could be maybe a bit soft and bearish. The month to 3, 4, 5 months could in fact see new highs occurring in the relative relationship. Remember, if the NASDAQ drops 30%, Bitcoin can still go up and lose 10 or 15% itself. So in the overall risk comparable, this is probably signaling the fact that Bitcoin's higher rate of loss to the downside to the NASDAQ is going to reverse. Okay, so let's take that off. I'm going to also show you Bitcoin dominance. So there was a period where the Bitcoin dominance started to lose some of its luster. We were running up. We also had a target there that remains to be fulfilled and has not been fulfilled. We pointed out internally to our community that there was a staling out of the Bitcoin dominance. I'm going to show you a couple of things here as well. This is in retrospect to you, but we discussed it in real time in the community. Basing ascending grind line was broken. It was clung to. You got back above it and then you let go. Marginally higher highs, failure to make new highs. And a little bit of a squeezy over there. Also, you get the form of broadening structures happening as well, and then remaining in the ground floor. Let's take our split out and redraw him. That was not the best draw. More like that. You're remaining in the ground floor and doing broadening structures. This is a problem and points to a lean on the basing ascending grind line that eventually gave up. So actually you've seen, as we did in our last video, a number of alts actually outperforming Bitcoin like in a mini alt run as Bitcoin was getting a little bit stale, tired and heavy. And it's given up its dominance from a point of almost the 45%, around 44.9 I would guess over there, between 44.8 and 45. Down to 43.3. So that means market cap that has been gained by alts that Bitcoin has not matched in its own growth to the upside. So a period of underperformance, for Bitcoin. It ran up quite strongly here and it's come down quite strongly. So now what's it going to do? What's going to happen on the underperformance? Again, a little bit of broadening on the downside, but it might chop around and need to base out. Ideally, you don't want it to take out that low. You might have a big dip down, then a little bit of an up and then another up. What you want it to do for a reversal is to get up to the 43.6 level and maybe give us a nice double bottom like that. That would point to the potential for reversals. Let's do some more cross market analysis. So if we do Bitcoin against gold, let's do him. Work with me on this one. So we'll take Bitcoin and we'll divide him by the gold futures. So as you're probably aware, and I've said many times, gold is not Bitcoin's enemy. One is entirely digital, one is entirely off-grid and physical. So, you know, actually there's quite a lot to differentiate it, and they both are in the category that we created and named anti-fiat that I see other people now referring to. We want IP rights on that. If we divide it by gold, this is what's happened. And this is why I say Bitcoin has made progress broadly, and an aggressive bearish stance probably is not accurate unless you're seeing all the other assets go down as well, because we're seeing a potential relative overperformance by Bitcoin for some of these other crosses. So again, this is Bitcoin divided by gold. Let's just remind you how much this draw worked, by the way. In terms of gold ounces, you wanted to be a leverage long, one of the rare moments of leverage long when you're at 6.19 ounces of gold for every 1 Bitcoin. Run it up and you would have got yourself 34.5 ounces, and now you're back down at 12, looking a little soft. Beautiful target make, and as I've said before, you want it out on the first high, not the second rally high, which actually was fatigue. Started to show fatigue, made a marginally higher high on dollar terms. A lot of that was function of dollar, but Bitcoin was already starting to lag on the technicals against the likes of the NASDAQ. So people were de-risking. So what has happened here? Well, the red box tells you how, why, and what the area of great interest. For me, you have broken out of the key area that was significant, and that was the capping descending grind line in red. So that is a break of the falling wedge. It was, you could have squeezed this into 3 days actually, running out of space. But you've had your 3 impulses there to the downside. You've had your 3 real sell-offs. This was brutal. I mean, the whole March, May, and then June sell-off period. Wow. Bitcoin truly underperformed gold. I mean, you went from around 20, almost 25 ounces there to a low of in around 9. That was extreme. You know, that was 2.5. You went down 2.5 times in gold terms during that period. Low vol often begets future upside. There are certain pattern structures where we'll call the bear, but generally very low volatility periods like that, you can fit it in a tiny slim box, preceded a nice little squirt to the upside and the eventual break here that has seen us. However, this price behavior over here was not brilliant. Little pop out the top before a break to the downside. You can expect a little bit of progress, decay, and pullback and churn. You could get, you know, the equivalent of a return move in the direction of the wedge. Whether it'll, I don't feel it will go all the way to the low line, but I think it will at least tip its head. So there's going to be a new wind up phase, a galvanization that is probably going to be required to get new momentum for Bitcoin against gold. And we've already done Bitcoin against the NASDAQ. So there you go. Also, we are watching, and I mentioned it in our trade alerts on the previous video. Go and watch the previous video. See the cards below. You will see Bitcoin versus Ethereum, which is the FBTC chart, and we've been keeping an eye. There is a move of sorts that wants monitoring here, and it'll either be to the downside if that comes all the way here, if we don't get another move up from ETH, and then I would fear that then you would have a sell-off for ETH, which is probably on Bitcoin going down and ETH even more so. So that I see as broadly bearish in a silver versus gold ratio kind of way. This is almost the gold silver ratio for crypto, Ethereum, BTC chart. So it's not the same thing. I know that, you know that, but as a parallel, it is similar. So we ideally, for bullishness, would want to actually see an ETH run against BTC, because that's probably them both going up. And you want that to not come too far down and then to go like this. However, if it turns here and this heads to this side, you could have something else where you're plumbing for a new low down that side. So a little bit interestingly balanced. When I look at ETH dominance, which we like to do, as I've suggested before, my concern is for this grind line that is here, which could beget, again, some rising wedge structure and some downside. So I think ETH might have possibly set up for a little bit of underperformance too, which may be in the back of a larger sell-off period in ETH, BTC, and Bitcoin generally. So be a little bit concerned about this. Key macro, the dollar, and the dollar has been moving up. You can watch a Market Sniper for more detail on that. I don't want to make this video too long and repeat everything else I've said, but dollar has potentially turned a corner. It has potentially, that's not a guarantee, but there's the sniffings of a few swallows that could beget a spring for the dollar. And generally that's not good for crypto as a whole until fresh drivers overcome currency effect. And we're not seeing that much in that space in terms of independent strength regardless of currency effect. Excellent. So my BTC friends, hope that's been useful for you. I'm sure many of you are haters of HEX, so you can leave the YouTube right now, smashing the like on the way out. To my Hexicans, my patient Hexicans, let's talk about the HEX and handle it promptly and quickly. So there has been a better spell out of HEX. We did say up top here that 51 was a high and that the 37 run of this head and shoulders, you might go all the way down to a cent. We've said that. We don't think that that possibility is foregone entirely, but you've seen a real recovery here. You touched actually 1.6, so I think that's pretty close, a call for the bearishness all the way up from there. Many of you, if you had acted even at the neckline of the head and shoulders at 37, not at 51, you would have held the bulk of your value. So you would have held, this is 1/20th, 1.6 is 1/20th of the, not even 122.5, I would say, of 37.5 cents. So you went as far down as having around 4% of the value had you acted at 37.5, not earlier even. However, subsequently you've come back up, back to about 4.6. Let's say there was a highs in and around 5, still substantially below 37.5, but some improvement. And the key chart that has changed also, looking at falling wedges a lot, is the channel break that is potentially on the way on the log scale chart of the HEX dominance. So HEX again, you could see it here, spiller, an absolute thriller, losing value there. These staircase falls, this was very flat. We warned there would be more downside round here. That was around 10 and 11 cents, I think, and then down, down, and down. And that was, of course, obviously very close to the bearish low, less than a third of percent in terms of total perceived market cap valuations. However, in recent news, there's been less posting of Louis Vuitton and more aspects of development on the PLS and the PLSX, or the Pulse X side of things, and this has brought a little bit of juice and excitement back into HEX in lieu of the potential of getting a split, an airdrop on the new chain of all your tokens that existed on the Ethereum side. So the question is, have we made, or are we about to make, a break out of this channel? On a normal unlogged chart, I'll just show you this as well. It looks very much like a wedge structure, but I think for this duration, the log format is the best way. You're not getting too many interactions, but you certainly have that low. You could argue again, have you broken? This is really just the high and the current point, so you should have something that is capturing more points to make it a valid line. So I would say it's not really a valid line. It hasn't been endorsed multiple times. However, on the log scale, which is a percentage based, which is very significant in terms of bear markets, as you get lower, it takes less capital to move a market cap, so you have these varying sensitivities. This is probably the best draw. It's close to a channel, a little bit of a squeeze slightly as you come down, so it's not quite a falling wedge either, but it's close to a channel. Lots of validated across the top. Well, still only about 2, but you had a big resistance there. You could argue 3 key moments of interaction. So HEX, what do you think? Leave your comments. Help us, for all the BTC guys that stopped watching at the mention of your name, by leaving a comment. What do you think is happening? When is Pulse X going to be out? When is Pulse going to be out? Give me your best guess of what Mr. Richard Hart will be doing and when he will deliver his product. Is he waiting just for a confirmation of a bull market, and will he be put off by Bitcoin being down entirely to avoid releasing it at any time where the market could be down or bearish? Or is he truly looking to finish the project as expediently as possible and get through those sacrifices and hand out the Pulse chain? I know version 3 is up. Give me your thoughts in the comments below, but some optimism on HEX. Let's do a final pass by on a chart I haven't looked at for a while, and I'm going to need to amend it slightly. That was the HEX against wrapped Ethereum. So wrapped Ethereum, let's do it like that. We're going to log it as well. So we just have to amend that draw a little bit, run those two highs, make it straight. There we go. And I think we can get this little passage of price behavior going through those other key points over there. So again, still a little bit of a squeeze going on, but maybe not as much on the log scale. But you have looking like, to me, let's just get that up to the top there, looking like to me that you have against Ethereum already broken a capping descending grind line there, which means there is some fresh momentum for the HEX project when compared to, I suppose, when you're talking Pulse and PLS, the key platform that is the de facto standard, although a lot more expensive, a lot slower. Let's see if Pulse chain can actually exceed that. What do you expect Pulse to do as on release? How many pulses are there? What market cap will it be at your price that you think about it doing? Before you say 100x, think about what the implied market cap would have to be on your token as a realistic. I'm interested in your comments, leave them below. So there we go. Bullish against WETH, looking optimistic, possibly a break against the USDC. Let's remind ourselves of that over there. But the key aspect is on the dominance chart. It's gaining ground again relative to other cryptos after actually underperforming other cryptos. Literally the aggregated whole, most of that will be Bitcoin and Ethereum, understandably, which are bigger market caps and less volatile by a degree. But you can see since the peak of, when was it, 20th of September 21, it has been in a cyclical decline. So since the 21st of January, we actually have had, how many weeks is that? We need a bit more, that's for sure, before you can get optimistic. So let me know your thoughts on that. Thank you for watching. I'm Francis Hunt, the Crypto Sniper, technical analysis on the macro charts and the smaller time frames on crypto and across traditional markets. The best there is out there. Hit the like button if you're glad I covered your token. Thanks, and we'll catch you next time. Bye for now.